Welcome to today's session about the new rule applicable to certain Canadian issuers, National Instrument 52-112, Non-GAAP and other financial measures disclosure. We have organized some short Vignet webinars as we've been getting questions on this new rule. We thought it would be beneficial to hold some short sessions, only 15 to 20 minutes in length, and go through some of these questions received. The first of 3 sessions we have scheduled focuses on the non-GAAP financial measures definition and non-GAAP ratios, its definition, and common examples of ratios that would be in scope of 52-112 and those that are out of scope. Before we start today's session, I've included our standard disclaimer that the views expressed today are our own and not necessarily representative of the ASC or the CSA. Let's start off with the non-GAAP financial measure definition. On this slide, the first important item to highlight is the fact that only financial metrics and those financial metrics that are disclosed are in scope. So if a metric is identified only by label without a corresponding numerical amount, then this metric has not been disclosed and is not subject to 52-112. Also, if the metric is non-financial, such as production, number of rigs, or share information, then this non-financial metric is also not subject to 52-112. The next 2 paragraphs I want to highlight are C and D. In C, the financial statements include both the primary financial statements and the financial statement notes. In D, because there is a separate definition and category for non-GAAP ratios, a non-GAAP financial measure does not include ratios. I will go through this separate non-GAAP ratio definition later on in this webinar. In paragraph A, the measure depicts historical or expected financial performance, financial position, or cash flows, meaning the measure is different from the one presented in the financial statements. Lastly, in paragraph B, the composition of the measure must include or exclude something from the composition of the GAAP measure. To be a non-GAAP financial measure, all 4 paragraphs of the definition must be met. I have a few depict examples. The measures that are unlikely to depict an aspect of financial performance, financial position, or cash flow are dollar change or percent change of a financial statement line item. Future revenues, where the revenue has been estimated and calculated in the same manner with the accounting policies used to prepare the line item presented in the financial statements. On the right, a measure used to discuss important trends and risks that have affected the financial statements or to explain the nature of and reasons for changes in financial performance, financial condition, or cash flows of an entity would likely meet paragraph A of the non-GAAP financial measure definition. And the next part of the non-GAAP financial measure definition we will look at is paragraph B, that the measure's composition excludes or includes something from the composition of the GAAP measure. As an example, a component or disaggregation of a financial statement line item where the components have been calculated in accordance with the accounting policies used to prepare the financial statement line item would not meet paragraph B of the non-GAAP financial measure definition, as its composition does not exclude or include anything different from the GAAP measure. However, adjusted revenue, adjusted to include the impact of realized gains or losses on derivative instruments, would be a non-GAAP financial measure. Even if your measure meets all of the conditions A to D of the non-GAAP financial measure definition, I want to highlight that for oil and gas issuers, there is an exception in section 4, where measures required by National Instrument 51-101 are out of scope. However, if an issuer chooses to disclose additional oil and gas metrics that are not specifically required under National Instrument 51-101 or Form 51-101 F1, then this voluntary disclosure of an oil and gas metric under Section 5.14 of National Instrument 51-101 are in scope of the non-GAAP rule. Moving on to the non-GAAP ratio definition. As we just discussed, for the non-GAAP financial measure definition, only those measures disclosed with the numerical amount are captured. Non-GAAP ratios are a specific subcategory of non-GAAP. As we discuss on slide 3, non-GAAP financial measures are the dollar amounts. Non-GAAP ratios are those in the form of ratios or fractions that have non-GAAP financial measures as one or more of its components. To assess this, you need to look closely at the numerator and denominator of the ratio to determine if any of the components are non-GAAP financial measures. And each of the components, the numerator and denominator, need to be looked at by going through each of the paragraphs A through D of the non-GAAP financial measure definition. And lastly, to be a non-GAAP ratio, the ratio itself cannot be disclosed anywhere in the financial statements, the primary financials, or the notes. To be a non-GAAP ratio, the measure must meet all 3 paragraphs of the definition. On this slide, we have several examples of measures that issuers or their advisors have been asking about. We will look at each individual measure to see if it meets the conditions of the non-GAAP ratio definition. 1, paragraph A, if the measure is in the form of a ratio. 2, paragraph B, if the ratio has a non-GAAP financial measure as one or more of its components. And 3, paragraph C, if the ratio itself has not been disclosed in the financial statements. If there is a check mark, then the condition in the non-GAAP ratio definition has been met. If there is an X, then the condition in the non-GAAP ratio definition has not been met. We'll start with an easy example, earnings per share. This measure is a ratio, so it meets condition A of the non-GAAP ratio definition. But conditions B and C of the non-GAAP ratio definition are not met, as earnings per share is a GAAP measure required to be disclosed under IAS 33 in the primary financial statements, and this ratio is disclosed in the issuer's income statement. This earnings per share measure is not a non-GAAP ratio. And in fact, earnings per share is not a specified financial measure subject to 52.12, because this is a measure presented on the primary financial statements that is required under GAAP. The next 2 ratios, revenue dollar per BOE and revenue by product category presented on a dollar per BOE basis. For both of these ratios, neither the revenue nor the revenue by product category components meet the definition of a non-GAAP financial measure, as they are either a financial statement line item or a disaggregation of a financial statement line item that has been calculated in accordance with the issuer's GAAP. However, both of these ratios would meet the definition of a supplementary financial measure if the issuer discloses the ratios or intends to disclose them on a periodic basis. Supplementary financial measures are subject to the disclosure requirements in Section 11, and these disclosure requirements are limited to 1, labeling, and 2, composition. For most oil and gas issuers, in looking at a typical MD&A, you have already provided the disclosure necessary. The title of the measure, revenue dollar per BOE, is generally self-explanatory. Also, many of you have already provided a description of what BOE per day is and how it is calculated. Beyond this, we wouldn't really see the need for any other disclosure under Section 11. The next example, revenue net of derivatives. This is adjusted revenue. So in this case, the component meets the definition of a non-GAAP financial measure, and its use in a ratio means that it is a non-GAAP ratio. EBITDA presented on a dollar change or percent change basis would not be a non-GAAP ratio in some cases. An example is where EBITDA dollar change or percent change would not be a non-GAAP ratio is where it is simply being used to discuss the variation in this measure. However, if an issuer has not disclosed the underlying EBITDA component, or this measure is mainly discussed using the EBITDA dollar change or percent change, then we would expect the required non-GAAP ratio disclosure. EBITDA per share, an easy example, the EBITDA component is a non-GAAP financial measure. As such, the measure in a ratio format is a non-GAAP ratio. But let's say the EBITDA component is disclosed in the issuer's reportable segment financial statement note, because the component is disclosed in the financial statements, the component is not a non-GAAP financial measure, and in this instance, the EBITDA per share would not be a non-GAAP ratio. However, the measure would likely be a supplementary financial measure subject to the labeling and composition disclosure requirements in Section 11. For this next example, the net debt to equity ratio itself is disclosed in the capital management financial statement note. But because the ratio itself is disclosed in the financial statements, the ratio is not a non-GAAP ratio, as it does not meet paragraph C of the non-GAAP ratio definition. Instead, it would be a capital management measure. Instead of the net debt to equity ratio itself being disclosed in the financial statements, let's say that the net debt component is disclosed in the financial statement notes. In this case, the net debt component is not a non-GAAP financial measure, and because of this, the net debt to equity is not a non-GAAP ratio. But again, this ratio would likely be a supplementary financial measure. This next example is a measure required under National Instrument 51-101. There is an exception in paragraph 4.1c Roman numeral 3, where the measures required by 51-101 are out of scope of 52-112. But oil and gas metrics disclosed under section 5.14 of 51-101 are subject to the non-GAAP rule in 52-112. So operating netback dollar per BOE is a non-GAAP ratio, where the component operating netback is a non-GAAP financial measure, and the ratio itself has not been disclosed in the financial statements. And this last example is one we looked at on slide 8, but in this case, it is adjusted revenue presented on a forward-looking basis. Non-GAAP financial measures capture both historical or future measures, so a ratio presented on a forward-looking basis can still be a non-GAAP ratio. And this brings us to our last example. We've been getting questions on what disclosure is required for ratios that meet the definition of forward-looking information. I'll go through some of the key disclosure requirements, but note that the entire disclosure requirements of sections 6, 7, and 8 are not replicated on this slide, just certain key disclosure items. Starting off, the requirement to disclose each non-GAAP financial measure that is used as a component of the non-GAAP ratio. For the estimated revenue net of derivatives for fiscal year 2022, the issuer would be required to disclose revenue net of derivatives for fiscal year 2022. The disclosure of this forward-looking non-GAAP financial measure triggers the disclosure requirements in section 7. With the key disclosure requirement being the disclosure of the equivalent historical non-GAAP financial measure, in this case, revenue net of derivatives for fiscal year 2021. And by disclosing this historical non-GAAP financial measure, the disclosure requirements in section 6 kick in respect of this measure. That covers off the 52-112 frequently asked questions presentation for today. If you have any questions on today's session or any other questions, do not hesitate to reach out to the Office of the Chief Accountant at the ASC. Our contact information is on this slide. Thank you so much for attending today's session. We have 2 other 52-112 webinars available for viewing right now. A link to each of these sessions is posted on the ASC website. If you have any ideas for any other sessions, or if you have any questions on some specific areas in 52-112 that we have not covered off today, or if you think another session would be helpful, do not hesitate to contact us. Thank you so much.